In this video, I'm going to share with you guys, the best indicators to trade boom and crash indices successfully without breaking a sweat. Now, these indicators that I'm going to share with you are they are accurate, about 95% accuracy. They are good. You can use them to trade candles. You can use them to catch spike. But the way you use them matters a lot. And not just that, with trading with indicators, you need to understand technical analysis. Not just technical analysis, you need to know, you need to perceive the market, know when the next price movement will be. All right, so I'm going to share with you these indicators. Now let's get on with it. Now, the first indicator that I'm going to talk about, let's start with the RSI, which is the relative strength index. Now, whenever you're trading boom and crash indices, this indicator, the relative strength index, is very, like, you need to use it. Okay, it's very important when you're trading boom and crash indices. Using the RSI, it's very necessary that you use it. Okay, you can also use other indicators like the stochastic oscillator, but this relative strength index help you, see, the overbought and the oversold region. Okay, that's basically what it does. Okay, use it to scale the trade, look at the overbought and the oversold, then you combine it with other indicators to give you a perfect entry. Now when you set the relative strength index for that entry, you set the parameters. Okay, there's what we call levels. Now the levels matters a lot. Now you can set level 90, 80, 70, you can bring them down below for you to get your perfect setup. Okay, but how you set it up matters. I'm going to show you how you can use this relative strength index on when you're trading boom and crash indices. Now let's go over to the indicator section right now. Currently on crash 1000 index right now, as you can see. Okay, crash 1000 index, go over to the indicator section, click on the main chart right here. When you click on that, you want to make sure that you look for the relative strength index. Go over to the relative strength index, look at that, click on relative strength index. Now this period matters a lot. Okay, you set your period. Let's just put this one to default right here. Period. You can set it to default. You can also change it however you want. Okay, now the period is 14 right here. Then you apply it to close. All right, then for the levels, this is the levels that I'm talking about. Now the level that you set is going to be your overbought and your oversold levels. Okay, now let's change here to this 30, which we have here. We're going to change this place to 90. Okay, then you change here to level of 10. Now this level 90 and level 10, it's different when it comes to different time frames. Like on the 1 minute time frame, the overbought and the oversold is different. On the 5 minute time frame, is different. On the 15 minute time frame, the 1 hour time frame, they are different. Okay, now you know that the lower time frame moves faster than the higher time frame. So basically, when you're trading boom and crash, you normally scalp the market on the lower time frame, but you also do analysis on the higher time frame to confirm more of your entries. Now what we do is put this 90-10 here at this very point. Then you want to make sure that you click on done. From here, then you can set the style, which you are seeing right here. Now this style is that line you see. You put the style here, you put it at this last line at this very point. You set a pixel, 3 pixel. We'll go over to the level again. When you go back to the level, you want to make sure that you put this level here, this one to this one. You change here to 3 pixel. You click on this and set that color to black right there, and you go back. Then you click on save. Okay, now let's go back to the main chart and see how it looks. Now you can see how the RSI looks at the very point. We have level of 90 here, we have level of 10 at the very point. Perfect. You can see the scale, you can see how it measures the chart, right? Showing you here level of 90. This is going to signify the overbought. Here is going to signify the oversold region. This is how you use it to trade the boom and crash. Works on boom, works on crash. Very perfect, good indicator. Then you want to make sure that when you're using the relative strength index, this style you see here is this same blue color which we are seeing right here at this very point. This blue color right here. So what you do is you want to make sure that you don't have it, okay, so that it doesn't make your chart a little bit sketchy. So what you do is to try and lower the pixel, put the style to 1 pixel, then you change this color. You can use the color of your screen, which is white, or you can use this gray color at this very point. You click on done, you go back to the main chart, and you can see is now lower at this very point. Here is not really that visible, or you can change it to color of white, color of your screen right here, change it to white background, click on save, then As you can see right now, it's totally gone. Okay, now we have a plain, chart on, the indicator right here. So you can see, the relative stress index is a very powerful indicator, and it works very perfectly. Okay, it tells you the overbought and the oversold region. Now, if you are familiar and you're always trading the crash and boom indices, you must be able to tell, where price is at the overbought and the oversold. It will help you, in the long run. Okay, now that we have the RSI, which is the relative stress index, we're gonna put in another indicator, which is, the MACD. Now let's talk about the MACD before I add it into, I combine it into the relative stress index. Now, what is the MACD? Now, the MACD is a very powerful indicator when it comes to, scalping the market on the crash and boom market. Okay, it tells you when to avoid spikes. Now, it's not going to tell you in a written word or in a voice format. It's not going to tell you like that. So what you should do is, if you are using it consistently, when you're consistently using, the MACD, is you're gonna observe, mostly on the crash market, on the downward trend, you see multiple spikes. Right now, you can see the way the MACD works is that it creates an upward trend, then create a downward trend. Okay, now basically on that downward trend, spikes, usually occur during that downward trend. So that is a, observation. It tells you, okay, for you to create a downward trend, it's already telling you to avoid, avoid placing buys on the crash market so that the spike doesn't get you. So if you are trading, the candles, counting the candles, you don't go over to that region for a buy when you see that the MACD is going towards the downward trend. Now, if we had the MACD, we're going to click on indicator window 1. Okay, we're going to add it together in, the relative stress index. All right, now we'll go over to the MACD right here. Click on the MACD. As you can see at this very point, now you can see you can leave yours to default. It also works that way. Okay, then you can see it. You can see right here we have the MACD. Now the main color, what we're going to do is change this main color to black. Put the pixel on 3 pixel with this first trend line. Then we click on done. Let's go back to the main chart and see how we can now take a look at this very point. You can see the MACD right here. Let's zoom in a little bit. All right, now let's zoom out and see. Now this is the 30-minute time frame. Let's go over to the 1-minute time frame. When you're trading boom or crash, you want to make sure that you scalp the market on the 1-minute time frame alone. You can scalp on the 5 minutes, 15 minutes, but I trade on the 1-minute time frame because that's how I see the market. I mostly see the market when it's going, it's moving fast at a very point, so you'll be able to tell the next price movement. You also go over to the high time frame to confirm your entries. All right, now we can see. Now take a look at the MACD right here in the indicator window 1 together with the relative stress index. As you can see, we have the MACD here, we have the RSI at this very point. Now level 90 here signifies overbought at this very point. Now what do you mean by overbought? When price overbuys, okay, price overbuys, it won't continue buying. It will definitely drop. Okay, so that's the position whereby you're expecting price to drop and market to reverse. Right, and you know that crash and boom, the market always buys and drop, buys and sell. So that's what you do. Now when price gets to the overbought right here, it retraces, it reverse for a buy. And if you're trying to catch a spike, you want to make sure that you're looking for that sell opportunity alone. So at this very point, when the MACD gets to the level of 90, you place your sell at this very point for the market to drop in price movement. Just as you can see right here, it dropped again. From the very point, it dropped again. Now remember I told you guys that during the downward trend, there's a lot of spikes from the MACD. During the MACD on the downward trend, if you experience multiple sells, but if you trace here from this point right now, you can see that this is the downward trend here from this point right now. Downward trend, look at 1 spike, 2 spike, 3 spikes. As you can see, multiple spikes. So you want to make sure that you avoid placing buys during the downward trend of the MACD. So whenever you're trading, using these indicators consistently, you're able to understand what I've said in this video. Now, what we do right here is that you can see once you zoom in a little bit right now, you're able to get a clearer picture of these indicators. Mainly and bestly when you're trading, this with this tool setup, you want to make sure that you're using the third zoom level. You zoom to the third zoom level for you to see clearly of how it is. Now you can see that now here is another region of overbought here, level 90 overbought region, but that's not actually the main overbought position, right? You can see that from here now, the market is still up high at this very point, but the market drops. It's boom and crash. That's how it works. So if you are able to understand the patterns and the market movements of this particular indices, you're able to trade it, perfectly, and you're able to predict the next price movement. Trading is all about predicting the next price movement, when the next price movement will be. So you as a trader, you cannot control the market. The market works on its own. So what you do is do your analysis and predict. And if you are good at that prediction, you'll be able to tell when the next price movement will be. All right, now let's go over to the third best indicator for you to trade boom and crash indices successfully without breaking a sweat. This comes with the moving average. Now, the moving average, you're already familiar with the moving average. We'll go over to the main chart right here and we'll add, the moving average into our chart. You're already familiar with the moving average. We set the period to, let's set this period right here, 200, 0 points, leave it like that, click on save. Just want to explain the moving average to you. Now, what is the moving average? The moving average, tells you the current market trend. It tells you where the price movement, the flow of the market, right? You can see at this very point right here, you can see it's showing the trend. Okay, the market is flowing towards the downward trend. Now, when you're using the moving average on the 1 minute time frame, you will not be able to get, where you will not be able to understand it clearly. You will not be able to see a clearer picture of where the price movement is going, right? Basically, what you would do is to go over to a higher time frame. Let's say go over to the higher time frame, like the 30-minute time frame or the 1 hour time frame. All right, go over to the 1 hour time frame, then you can tell, you see that the moving average is currently going towards, the trend of the market. But I don't mainly use the moving average to predict, I combined moving averages. Okay, you can combine other moving average together to get a clearer picture of where the next price movement will be. Okay, so these three indicators are the best. They're also very, very powerful indicators, like the stochastic oscillator, okay, the market facilitation index. We have the other powerful indicators, the boost power, all right, the boost power, and also I think very powerful indicators here. Let's see what we have here. And yeah, we have the Bollinger Bands, we have the envelopes, and we have the momentum. So these are very powerful indicators that you can use to trade boom and crash indices without breaking a sweat. Now, you don't need to master every indicators, okay? All you need is the perfect one that works for you when you're trading boom and crash indices. All right, so if you found value in this video, and I hope you understand, all right, I already believe that you understand everything that I've said in this video. So if you found value, do it, like and subscribe, and also join my Telegram community, the Daily Forex on Telegram. On my Telegram community, I share with you guys, tips, strategies, and give you guys free signals on, synthetic indices, Forex, boom and crash, trading as well. So if you find value, do it, like and subscribe. I'll see you guys on the next video.